Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, December 31st. The stock market finished 2008 on a positive note, gaining 1.4% this session and 3.9% over the past two sessions. The advance comes amid light trading volume, though, suggesting a lack of conviction behind the move. Trading volume and news flow were relatively light in the final trading session of the year. Just 1.3 billion shares traded hands on the New York Stock Exchange as market participants remain on vacation during the holiday season. Though that was the highest volume in the last 7 sessions, it remains below long-term trends. Without any major news items, participants were left to focus on a better-than-expected weekly jobless claims report. Claims for the week ending December 27th totaled 492,000, down 94,000 from the prior week. The decline was largely treated as an aberration, however. That notion was supported by word continuing claims increased to a multi-year record of more than 4.5 million, which was higher than expected. Weekly crude inventory data also hit the wires this session. Inventories increased by 549,000 barrels. That contrasted with the consensus forecast, which called for a draw of 1.45 million barrels. Crude oil prices advanced in the face of the bearish data. After spending most of the session trading lower, crude rallied to close roughly 14% higher at around $44.60 per barrel. At its session high, crude was up nearly 17%. It was down nearly 5.4% at its session low. Despite the advance, crude prices remain pressured by weak demand, which has stemmed from economic headwinds. To help counter such headwinds, President-elect Obama is hatching a massive economic stimulus plan. However, the Wall Street Journal reported such a plan may not reach Congress until late January. Many were hoping a plan would arrive sooner. Meanwhile, the U.S. Treasury announced further details surrounding its automotive industry financing program, which will apply to automakers, auto finance companies, and any other firms it views as important to the industry, according to Reuters. The announcement provides further clarity around the $17.4 billion bailout package the White House previously approved for U.S. automakers. Shares of General Motors still slumped, but Ford finished unchanged. Overall, stocks finished the session with broad-based gains. All 10 of the major economic sectors closed higher after spending virtually the entire session trading in the green, though there wasn't a true leader among them. U.S. stock and bond markets are closed tomorrow, January 1st, in observance of the New Year's holiday. Markets will reopen Friday, January 2nd. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a safe and happy New Year.